Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week get everything you need to know in 90 seconds at 9 o'clock with news. The American labour market data for April seemed to have something for everyone. New analysis shows that American labour productivity is rising and at its quickest pace since the 1990s. And in 2023, that was its highest rate in half a century. It is too soon to credit AI, so this could be a new and important trend. Rising productivity is an essential precursor for rising standards of living. But over the weekend, the US economy reported that they only had 175,000 new jobs in April on a headline seasonally adjusted basis, the least since October, and a deceleration compared to the upwardly revised 315,000 jobs added in March. It fell short of market expectations. But we should not forget that labour market data is a lagging indicator. A leading indicator is a metric like the PMIs, and the ISM Services PMI for April turned negative, dropping sharply to a contraction of 49.4 in April from an expanding 51.4 in March. This is their first contraction in the services sector activity since December 2022, and it surprised markets who had expected a continuing expansion. But before we get too carried away, we should note that the new order component remained expansionary, so this overall drop might be just a blip. Despite the headline of a labour market and services sector undershoot, the markets liked the implications. Risk appetites returned with the S&P 500 rising, bond yields falling, and the US dollar easing. Basically, markets now feel US rate hikes are less likely as inflation pressures are easing, just as the US Fed itself seemed to have suggested. The expectations of one 2024 rate cut late in the year are creeping back. And China returns from its Labor Day week of holidays today, but there are no real signs their property market has bottomed out, as some claim. In fact, banks' mortgage books are now shrinking, undermining claims of the market is stabilising. In Australia, eyes are turning to tomorrow's rate review by their central bank. No changes expected, but it will be closely followed for signals of the recently talked about rate rise possibilities. The US Treasury 10-year yield is now at 4.51% and little change from Saturday. And the price of gold will start today up a minor dollar at $2,301 an ounce. And oil prices have stayed down at just under $78 a barrel in the US, while the international Brent price is still just over $82.50 a barrel. And the Kiwi dollar starts today slightly softer from Saturday at just over 60.1 US cents. Against the Aussie, we're still at 91 Australian cents. Against the euro, we're little changed at 55.9 euro cents. That all means our trade-weighted index starts today at just on 69.3 and down 10 basis points from Saturday. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.